everybody, and welcome to today's webinar with Tungsten Metals Group. I'm Dannika from Investability, and I'm delighted to introduce you to a new ASX IPO. Tungsten Metals Group owns and operates the largest and most advanced ferrotungsten production facility outside of China. Here to tell you more today, I'm joined by the Executive Chairman, Tony Adcock, CEO Martin McQuaid, and we've also got the lead manager to the IPO, Sandilands. I do encourage you to look at the prospectus, which is available on the company's website. We'll jump in straight away and I'll hand over to Sean to give you an overview of the IPO.
Thanks, Dannika. I'm Sandilands from SDK Markets. We've been working with the Tungsten Metals Group for several years now, getting it ready for IPO. This is one of the first IPOs we've done in several years due to market conditions, and we've been very selective in what we've been looking for. The Tungsten Metals Group is a company that is ready for revenue. It's based in Vietnam, which is a low-cost jurisdiction where we're processing tungsten. We don't have commodity risk as we're just buying and selling tungsten relatively quickly over 30 days, and we just make a margin on the processing of it, which I'll let the company talk to. This is a cash-ready business. There's no capex required. What this company does is the IPO proceeds will be used to purchase tungsten, which will be used to generate revenue and profits for shareholders. As I said, the capex is already there. Management have got a very big position in the company, so they're incentivized to make the share price works, which we do like seeing directors aligned with shareholders. But it's a company which I've personally invested in. The last IPO we did was Southern Cross Gold. We've put a little bit of money into the pre-IPO up to about 3.8 million. My investors that have backed that are very well aware that we've got a hold to let the company get on its legs, process some runs, show what the market, what this company can generate, and it's very good. We buy in US dollars, we sell in US dollars, so the commodity risk is minimal, and we've got a very experienced management team, which the key manager in Vietnam owns a very large portion of shares in this company, so he's incentivized to make it work. This is not a lifestyle company. This is a company which is set to generate returns for investors, which is why I'm investing it, and my investors are as well. I implore you to do your research, have a look at the prospectus, have a bigger look at it. But this is a business which is coming in to raise 14 million at 20 cents. The market cap will be 38 million. And within 3 years, this company can generate around about 38 million in EBIT. So you're looking at a PE of 1 in that 3-year period. Within the first year with some debt, we're hoping to make 10 million EBIT. So just bear in mind that market cap of 38 million, there's a lot of upside there for those value investors that are looking at something which can produce income for their portfolio, and also a lot for that growth portion of the portfolio. So it sort of fills both gaps in your portfolio. It gives you the growth potential and also that income in the future when this company will potentially pay dividends. But what I'd like to do is I'm very happy to introduce you to Tony Adcock and Martin McQuaid, and I thank you for your attendance today.
Thank you, Sean. Thank you, Dannika. As Sean introduced, my name is Tony Adcock. I'm the Executive Chair for the Tungsten Metals Group. This is a very exciting opportunity to participate in investment in a critical mineral of global economic importance. We're the only production plant outside China and Russia that can do more than 500 tons of ferrotungsten every year in production. I'll talk about our targets in a minute. 86% of the world's tungsten comes from China and Russia, so we de-risk supply chain by being out of there. You can see the plant in Vinh Bao, which is in North Vietnam, and we have a team of highly skilled professionals that produce this ferrotungsten for us. Notably George Chen, who's actually one of the top global experts in ferrotungsten and tungsten. I might take you to the next slide, which is really to talk about tungsten as a material of critical economic importance. You can see from the bottom left there that China absolutely dominates world production, and you can see more recently that China's put some restrictions on exports of certain rare earths and critical minerals, and we probably expect that to impact tungsten. So from our point of view, we de-risk supply chain because we're outside China and Russia. We can produce to high volumes, and you can see from that amongst all the raw materials of critical economic importance, tungsten is right at the top there. So it's a critical mineral recognized by all the major global economies. I might move on to the next slide, Dannika. Tungsten is in everything. it's in high-speed materials, high-speed drills. It's basically to strengthen super alloys and steel. You can see from the schematic there that it's highly representative in the defence and armament industries. It's in the super alloys around turbines, wind turbines, turbine engines, and so on. It really increases the melting point of all alloys. It strengthens those alloys. It can be used in batteries because it improves the connectivity between anode and cathode. And as I said, we are outside of China and Russia. So where demand is for us, it's coming out of the defense inventories in the USA and Europe. It's coming out of Japan. And we're well positioned to take advantage of that. I might move to the next slide if I may. We have a world-class facility. At IPO, our 60/40 joint venture comes together as 100% ASX listed. We have the largest furnace outside of China. In fact, funny enough, our furnace itself is worth about $5 million simply because it's made of tungsten. We can produce up to 20 tons of tungsten a day, which allows us to start in year one at 2,000 tons and then move up over 3 years to 4,000 tons of production. Vietnam is a very safe place to produce business. We've been there since 2013, and the sovereign risk with Vietnam is regarded as low. You can see there our plant, the green roof there. In front of that is an area where we will build in the future a sodium tungstate plant, but the heat plant itself is under that green roof that you can see. And then out of the back there, you see some cooling towers that collect dust, but also collect our wastewater. So the whole building is built to Australian ESG standards. I might move on, if I may, too. Over the past 4 years, the company has really been operating at doing toll runs for other people. Those toll runs are profitable, but of course, if we did the runs on our own account, we've extrapolated that to say if we've done the runs of about 935 tons over the last few years on our own account, gross revenue would have been 46 million. So I ask you to extrapolate that forward in the next few years. This is what we're aiming to do. We're aiming to hit revenues of 100 million plus, and I think that's very constructive for anybody coming in. As I said, the plant's been going since 2013. We've kept the lights on in the last few years simply by doing toll runs, but this is the impact of being able to do runs on our own account. And our target markets are the US and Japan. So look, that's really the main message from us. We're in operation. We're generating cash from day one. It's a safe jurisdiction to operate out of. We de-risk supply chain because we're outside Russia and China, and we don't have any exploration risk. So I might hand back to you, Dannika, to move forward.
Thank you, Tony. Thank you. That was very informative and very punchy. We do have a lot of questions, as I told you before the call, so we'll jump straight into those. The first one is from Robert. He's asked about the process of acquiring the tungsten. He asks, where will you acquire the recycled tungsten feedstock from? And is it important if it's sourced from where it's sourced from a supply chain?
Absolutely. We source all our feedstock from ethical sources. So Vietnam, South Korea, Taiwan, India, Europe, Spain, France, and the UK produce tungsten. It's really important that they're ethically sourced because we are audited. We have to be able to show our supply right the way back to 5-ton bags of concentrate. So everything is sourced ethically from that. From a supply chain perspective, I mentioned earlier, we de-risk supply chain by doing it that way. We're audited. So, we have to make sure that we provide the tungsten feedstock from ethical sources.
Okay.
I hope that answers that question.
No, that was perfect. There was a few questions that came in on this next one, which I might throw to Martin. It was around, is there a risk that you won't be able to source the feedstock? So how confident are you that you will be able to do that?
Thanks for that question, Danica. We're very confident in being able to source the feedstock for the plant because, as people may not know, 35% of tungsten that's produced now comes from recycled sources. So it's becoming a very mature, sustainable recycle industry. And so we tap into the recycled streams. In the past, we buy mineral concentrates only, but now we buy tungsten from the mineral concentrates and from recycle. In fact, our last production run in July this year, over 50% of what we processed came from recycled sources. So we're very confident going forward in being able to meet our requirements for feedstock.
Okay, brilliant. And Tony, there's one from Sam that's come through on the production targets and the revenue. You did touch on it in your presentation, but can you provide some further clarity on your production targets, the estimated revenue per production run, and what sort of margins you're forecasting for the business?
Yes, a very good question. I'll start with margins. You know, we're consistently hitting 20% gross margins, and we don't see any change to that. If it does, it might be premium margins on specific contracts like defence. So I'd say 20% of the sort of margins that we would consistently get. In terms of revenue and production targets in year one are 2,000 tonnes per annum. And as I alluded to when we looked at the slides, we're the only plant outside of China and Russia that can produce more than 500 tonnes a year. So year one, 2,000, ramp up to year three, 4,000 tonnes per annum. In terms of the revenue from that, let's take year one, 2,000 tonnes in that year would generate about Australian dollars, $60,000 return per tonne.
Okay.
So we're talking about revenues close to 100 million in year one, moving up from there. And so by year four, you know, year three, we're hitting 4,000 tonnes.
Okay. And is there any currency risk with any of that? Or are you...
That's a very good question too. We buy our concentrate and feedstock in US dollars and we sell in US dollars. And we hold our accounts in Singapore and Australia in US dollars. So we minimise risk to currency fluctuations.
Okay, brilliant. Peter has asked, who will be your main customers, and is there enough demand for your product from these customers? What are the main sources underpinning demand? Maybe I'll throw that one to Martin.
Yeah. That's a good question. We get that asked a lot in a recent roadshow. And so the main demand drivers for our products come out of transport, mining equipment, construction, industrial activities, energy, and the big one at the moment is defence. Obviously, for reasons which we don't need to go into, you can see that defence spending is increasing across the world. In fact, some of the major economies have run down their stockpiles of tungsten. And so now they're looking to re-establish those stockpiles and build them up. And so defence is a growing market for tungsten products. It was always there, but it's becoming quite large.
Okay. And the next one is on the future sources of funding. Tony, you mentioned that the IPO, or Sean mentioned that the IPO is raising between 12 and 14 million Australian dollars. What will these funds be used for, and how far will they get you to achieving your production targets that you mentioned earlier?
Yeah, Dannika, I like to think we're aiming for 14 because I like to see the glass half full, although 12 will be very good. That's a really good question, and the use of funds statement is in the prospectus and is accessible on the website. But for clarity, whether we raise 12 or 14, something like 10 will be used to buy concentrate, and we'll look to produce, 400 to 500 tonnes between now and December. So most of the funds go on spending for concentrate. In terms of how far that will take us, we're generating cash from day one. From the cash coming in from the normal cycle of a production run, as Sean said in his outline, about 6 weeks. By the time we've produced that, got the revenue from that, we're really washing our face from day one.
Okay. And there's another one here on the JV partner, and I guess the sort of the ownership structure post IPO. Can you provide a bit of background on your JV partner, their ownership and involvement going forward with TME?
So since 2013, our JV partner, we've been a 60-40 JV partner. Our 40% shareholder is a guy called George Chen. George is the production director for our plant in Vinbao. George is one of the top 3 tungsten gurus in the world, so we're very lucky to have him. George is on our main board, so he's on the holding company board, and his role is to research new products and to run the production lines going forward. When we IPO, his 40% will become about 27%. But George is highly incentivized and highly motivated and totally aligned with our board and management to make this thing work. So he's very excited by the IPO and brings his expertise. And I really mean it. He is a global expert.
Yeah, oh, that's definitely a great asset to have in your back pocket. I might throw one to you, Sean, on the share, registry and what the shareholder is going to look like post IPO. Could you maybe give us a bit of a feel for what sort of investors the IPO has been appealing to so far? Oh, we can't hear you. You might be on mute there.
Sorry about that. There's been a mix of investors that have had interest from. A lot of institutions have liked it, and they've sort of changed the dynamics of their book. They're saying, well, it's not the biggest IPO ever, as it's only 40 million. But because it goes straight to revenue, it is very appealing to those value investors. And the valuation of where we're coming to, and as I said earlier, in 3 years' time, we're virtually doing a PE of 1. And so there's a lot of room for growth. So we're getting those value investors that want a dividend play in their portfolio in the future, and they're buying that revenue now because obviously it's at a significant discount to what it'll be as soon as we prove it working. But we've got a lot of Southeast Asian investors that are looking investing in this. A lot of the downstream or upstream parties that we deal with are wanting to invest, because the problem is, as we're the only plant outside of Russia or China, in order for them to get our product, they're wanting to come into the IPO to try and have a little bit more push to get there. So it's looking quite good from that regard. So as an industry thing, we can sort of see the industry knows that they need this business, which really shows to me investors need to look at this. So I've had a lot of my investors come into the deal, like with Southern Cross Gold, where I think that looking at the market now, that's almost 14 times what we invested in there. So the investors that we've put money in, they're good long-term holders. So these aren't the type of investors that'll see 20, 30% and then they're prepared to flip. They're more interested in that 1 to 2 year hold where they can see the company get in its stride, do 6 to 7 runs, as Tony and Martin have alluded to. The market starts to really respect that this company can just create revenue quarter after quarter, and they're there to see that growth. So we haven't gone to the market to the investors that come in and sell straight away because we know who they are. We're really after those longer term investors that aren't going to flip to get a stag. They're there for the longer term. So we do see there will be a little bit of liquidity when the market comes on, because that's always the way people will buy and sell. But the majority of the investors are those set and forget, and that they will talk to the company. They will get updates. So we are very good at reporting, as obviously being an ASX listed company. We've been to Singapore several times already, where we are seeing a lot of investors who hold. And yeah, we should have a very good book that'll be firm and won't be on the sell side as soon as we start trading.
That's brilliant. Thank you for that. I guess another question on the ownership structure. I might throw this one to Tony. What percentage of the board and management, how much will they own of TME post IPO? And are there any other substantial shareholders we should be aware of?
Yeah, look, post IPO, the board and management own about 40% of the shareholding. Everybody has put in to date and continues to put in. And in fact, even Sean on a personal basis has invested in us. So the majority shareholder going forward after IPO will still be George Chen at 27%. And then after that, it's just instos and high net worth individuals, as Sean was talking about just now. So board of management, probably 40%, Dannika.
Okay. We have had a few more questions come through in the Q&A. I might just read one out on the plan, that we didn't cover it, from Peter. He actually has two questions about the smelter. Firstly, your plant in Vietnam, how often do you have to do the relining of it and other maintenance? Secondly, if a new plant only costs $5 million, do you have any plans to add smelter units?
Okay, I'll hand that one to Martin to answer.
Yeah, the furnace is actually a little unique in that the liner of it is not made of bricks, which you'd expect in a steel furnace. The liner in our furnace is made of ferrotungsten, and it does not get replaced. And so every heat that we run, every production run, it'll get warm, but it protects the molten ferrotungsten from the outside steel shell. And so we have about, as Tony was saying, actually the $5 million refers to just the liner part of the furnace, because we have about 150 tonne of ferrotungsten there, keeping the molten ferrotungsten separate from the steel. In terms of replacement, the replacement asset value of the ferrotungsten furnace is probably, and the facility, is probably closer to about $30 million US. And
Wow.
so that would take probably 2 years for somebody to replicate. And then, of course, and one of the key things we haven't talked about is our team. You need to have a very good team of experts who know how to make ferrotungsten to be able to compete with us. And they are, well, we think we have the best team. So it'll be interesting times if somebody would like to compete.
So definitely an IP component to
Absolutely.
Yeah, I guess a moat around being able to replicate what you've got.
Yes.
There was a question from Kevin on the timeline for dividend distribution to shareholders. Potentially a bit premature, given you're not listed yet. But
That's a good question. Good question.
Yeah.
I'll answer that. I think in the first couple of years, we'd really like to put money back into the business. You know, I think the board's discretion, and the board will review every single year whether we should pay a dividend. Once you start paying, you've got to keep going. So in year one, maybe year two, we replow money back into the business just to grow it. But it will be a dividend paying company.
Okay. I've got one final question from Glenn, which is pretty simple. He says, how does one apply for shares?
Well, I can answer that too. Sean's probably the best guy to do that, but I'll answer it ahead of that. The application is on our website, tungstenmetalsgroup.com. There's a button that's labelled IPO. There's an investor presentation, an application form, the prospectus itself, a couple of videos. All of it's there, Kevin, and you know, we'd welcome you to have a look. Yeah,
there's lots of great info on your site, so we'd encourage investors to check it out.
Yeah.
I guess to wrap up with Tony, we've got 2 minutes to spare. Do you have any final or parting comments that you'd like to leave investors with today?
I would, Dannika, thank you. Look, we're very excited because tungsten is a critical mineral of high economic importance. This is an opportunity to join a journey and invest in a critical mineral in high demand. It's high demand because you can't get it out of China or Russia right now. We're a market cap at IPO of about 38 million on an EV of 28 million. It's an immediate income generator, as Sean said in the beginning. We have absolutely full management backing, both in Australia and in Vietnam, to making this thing work. It's been a journey to get to this point, and we're really now at the starting line to make things happen. And global demand is there. You know, we get calls every day.
Yeah. Well, very exciting times, and I wish you the best of luck. And the team, thank you, Tony, Martin and Sean, for today, and thank you to all investors who joined the call. A replay of today's webinar will be emailed to you, and feel free, if you've got any further questions, to reply to that email. There's also contact details, of course, contained within the prospectus. So that concludes today's webinar, and thank you again.
Thank you, Dannika.
Thank you.
Thank you, Sean.